Good afternoon, everybody, and welcome to Live Market Analysis USA edition. We are going to head over to the US and find some of the best opportunities in global finance right now to add to your portfolios. My name is Carl Capolingo. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to be with you. As it is a really simple format today, you give me your questions, and I'll give you my technical and fundamental analysis where possible. There was a bit of a technical difficulty on restream with LinkedIn, so if I'm not streaming to LinkedIn, apologies to those people who normally join me there, but you'll have to just stick with the recording. Let's head over here to the charts first. And I do have some requests coming through, but I'm going to kick off with a follow-up from last week's uranium sector review. I think it's worth it. Well, let's have a quick look at the uranium price first. That's over here. So this is a weekly chart, as you can see up the top here. It says W, that stands for weekly. And we're looking at the uranium U3O8 futures, which trade on the COMEX futures exchange in the US and in terms of US dollars per pound. And I wanted to zoom out as much as possible to give us an idea of, where we are in that historical trend and maybe potentially some of the opportunity that might be in front of you bulls. And for you bulls, as in you bulls and you bulls, I know you've been holding on for such a long time. You've been keeping the faith. And I think maybe your time in the sun might be just around the corner, because we can see how the price continues, to grind high into what is so clearly a $60 area of supply that the market must get above. We must close above the 60, really, I think, to finalize this fledgling bull market. And I do think we are in a bull market for uranium, because you can see my long-term trend zone, that is my 144 and 233 EMAs have turned green. Not only have they turned green, but the size of that ribbon continues to expand, and that tells me we've got gathering momentum. The short-term trend, look, has wobbled a little bit, but has held each time. You can see at $30 and $37 held that long-term zone, because on the way up it tends to act as an area of what I call dynamic support. You can see through here how the green zone cushions the price, sends it back up, but on the way down it tends to impede the price and send it even lower. Okay, until we can get above it, hold above it, it changes. Short-term trend looks good, and again, just that $60 level. Where could it go after that? Well, 72 is an obvious medium to long-term target. And I say medium to long-term because there is no short-term in uranium. Everything takes forever to happen, it seems. Maybe that's where we're headed next. And let us not even think. I'm not a dreamer. I know you bulls are dreaming all the time, but let us not even think of anything above that in the medium term. But it looks pretty solid here. So last week we started looking at some of these uranium plays. I wasn't sure, and again, only just that morning had got a list of a few U-bulls off the internet, and this was one of the ones that was suggested. I did, disclaim that list by saying that I hadn't had a chance to vet each of those companies yet to make sure that they deserve to be there, and I wasn't sure about this one. This one does appear that it needs to be in this list. It's a correct me if I'm wrong, it's a bit like a SPAC, so it's a special purpose investing fund that is looking to invest in the uranium space. At the very least, they've got uranium on their website. That's as much as I looked into it. And you have to understand, for uranium bulls, honestly, I don't care what these companies are doing. I don't even care if uranium goes up or down. All I care about is whether there's an opportunity to make a trade, make an investment that might last for a day, a year, or forever. I just don't know. If it's going up, I'm happy to buy it. And that's going up. So look, I don't mind it, but understand, look at the scale here. There's really not a lot going on. It's a very, very slow and gradual grind higher. In terms of the producers, we looked at this one last week. I put a plus 1/3 on the screen. So I'm guessing we said that you could look to add some risk, understanding full well that there are some supply zones that need to be conquered in the near term, and possibly that $60 level, it is such a massive psychological level, possibly that'll be the catalyst to get Cameco into the 32s and maybe 33s and beyond. But if I do look at the weekly chart here, it is just such a wonderful basing pattern. I think this just really looks quite spectacular, actually. I was trying to find the right word there, but typically what can happen, and it's just possible. This is possible. I'm not predicting. I don't do predictions, but what often happens is, you can get a move out of a consolidation phase, which is similar to the move that preceded the consolidation phase. And you can see we do have a general trend here. So again, I'm not a predictor. That's not my style of technical analysis, but I can see that we are seeing this accumulation in the market where we are seeing excess demand. That's what all accumulation is. And in many ways, supply rethinking their strategy, rethinking their position on this one. Supply is not as certain, and demand looks increasingly certain. So that could precipitate a breakout to the upside there. Cameco, for the uninitiated, is the world's largest listed uranium producer. So if we do get a pop in prices, this is the company that can ramp up supply, because they do have a bunch of idle supply, and they've got a bunch of stockpiles as well. So if and to be fair, Cameco is the elephant in the room, and they could kill any fledgling rally in uranium as well, because they've got enough uranium really to keep the lid on the market, and probably that's what's been happening anyway. But anyway, if you do get the breakout, that's one place to go. And I'm just going to move down the list here, and this is pretty much the list if you're looking for exposure in the USA. Now, there's so much more exposure in Canada, and I'll leave you to your own devices there to investigate those. It's beyond the scope of this session, which is specifically US shares. And of course, we do the Aussie shares, and we've talked about many Aussie producers and developers on Tuesdays. But let's just stick to the NYSE ones. Denison Mines, you can see $1.20 there, puts it into perspective. I'm guessing, I haven't looked into these, I must admit, but I'm guessing more of a developer rather than a producer. I do know about this one here. I do know it is a developer. I do know they are quite progressed in their development, as in environmental licenses are being obtained. They're at front-end engineering design phase. So they are probably 12 to 18 months away from first production, probably more like 18 months than 12 though. And I do know that these guys down here are also producing as well. Okay. But let's go back to Denison. Look, in terms of the charts, and I'm going to look at them individually and in no relation to the other ones. So when I say here plus 1/3, and we're going to see a few plus 1/3s today, it doesn't mean you go out and buy all of them, because you're effectively buying the same thing. So be sensible with how you allocate them, and maybe based upon certain quirks in the technicals, you might say, well, I prefer this one than another one Carl might have talked about. But I genuinely like what I'm seeing here on the chart. We are seeing out of a pretty substantial consolidation phase through here. Lots of white candles in there telling me there's plenty of demand. A few volume spikes telling me that demand is coming in. We're removing some supply. Long lower shadows. All looks pretty good. We were at two supply zones here. Firstly, with this little point of supply in here. And the reason why we had a point of supply there was because of my downtrend zone impacting on the price. But we have pushed into that zone. And it looks to me in this last little bit here that supply is now transitioning into demand. And it's very short term, but that's what I see. And we then can get a push off. And last night's candle, I think, is very, very good. I think it's a really strong showing of demand in the system. And maybe there's a little bit of a pos here, but I think it's a minor one. I'm not going to get too stressed out about it, because I think that the proper pos, if that's the right technical term, is much higher. That's the one I wanted to draw there, and that's where we're heading. So for me, as I said, uranium, next big uranium bull market or not, I don't know. All I can say is I like the turnaround play. I see demand coming in, and can I make better than 1-to-1 reward to risk on this one, with a stop possibly set below $1, an entry around $1.22, 23, and a target towards $1.50? Yeah, I think I can. So I'm happy on that basis, therefore, to go plus 1/3 there. And I'm just going to go ditto on a lot of these. I think they look very similar. I think that's as good as the last one we saw. There's a bit of a pos here, and as I said, I'll let you decide which few you might do, but I'm no objections to going plus 1/3 on that one. That is Encore Energy Group EU is the ticker code. Look, this one I don't think is ready yet, so it's not across the board. I would say keep an eye on this one. If you had it, happy to hold it, and it would need to do many of the things that the other ones have already done, which is get above that long-term trend zone, turn it from dynamic supply into support, and push higher with some nice price action in candles. So I can go hold, but not a buy. This is one of the ETFs. NLR's a ticker code there. Look, it looks a little bit like Cameco, if anything. So I wonder if Cameco is their main holding. It probably is. But I'm guessing in addition to Cameco, you're getting a bunch of other stuff. And there's that sort of weekly chart, big consolidation phase, just edging towards a breakout. And coincidentally, at $60, I wonder if this has got some actual physical holdings in it as well. Look, I'm not professing to be an expert on the underlying fundamentals, but I do profess to be an expert on the technicals. That is my backyard. And I think that looks very good. So again, I can't see any reason why you couldn't add some risk there. There are some other ETFs here, which I think I prefer, so I won't put the 1/3 on that one. Nexgen Energy, again, I love the demand zone through here. Let me just draw that in. It's held it really well. And look at this last push and look at the volume in here. I think there's some serious interest has come into this one. And in particular, this candle here has really caught my attention. That's the one I really like. And we've had such a limited supply side response after that candle. And normally we get told, economics 101, when things go up a lot, and this one did go up a lot, there's plenty of selling. And there was a bit of selling, but really that selling just hit, I believe, some really, really focused demand through here, that shadow and this last candle. So again, no objections here to going plus 1/3. And there's a reason why I'm going to talk about this at us because I think it's my favorite out of the developers out there. So that's Nexgen Energy, ticker code NXE, a happy addition there. SMR, clearly for me, based upon my methodologies, not ready yet, plenty to do there. If you had it, could you hold it? Well, there's a few white candles in there, which I think could allow you to hold it to maybe only get a better price. But what we're going to see here is the haves and have-nots, and you don't want to be in the have-nots. I don't think you go, well, the other ones have already gone up, and therefore I need to buy this because it hasn't gone up yet. I think you stick with the ones where there is excess demand in the system because there's a reason for that excess demand. We're not seeing that here. I think if you were holding it, you'd be getting out beneath that red arrow. UEC, I think this one actually looks pretty good. I don't think it looks as good as some of the other turnaround plays out there, but yeah, look, it's really, and I only say that because it hasn't bested the long-term downtrend zone. But otherwise, the price action is really clean through here. And in fact, the candles are up there. I think they're up there with all of the other ones we've seen. So I'll leave this one with you, but it would only be a super cheeky plus 1/3 because, as I said, my model is we need to get above that long-term trend zone, and preferably at least the long-term trend zone has at least turned orange. But just in terms of what's happened here, this, and this, it looks super prospective, actually. So I can't do it, but that doesn't mean you can't if you were that way inclined. This is one I think we looked at last week and we already put the plus 1/3 on, and maybe after that candle there. And what I'm going to do is just copy and paste that, because I think if you did do the plus 1/3, you'd be adding another 1/3 here. Am I worried about that? Look, just make sure you can get sort of a 1-to-1 going there. I think you can, stops sort of somewhere down there, but happy to continue to add on global X Uranium ETF. I've got another ETF here. UR Energy, look very close. You can see it's interacting with the zone. I think these candles are super, but it might be in the category of the other one we saw before, which was UEC, where actually there's some really good stuff going on in the technicals, but we just haven't got above that line. This would be a super aggressive dip the toe in the water plus 1/3 for me. But honestly, I'd prefer to just wait a little bit more to be sure on that one. But hold it, 100% hold. That is a no-brainer for a hold. And you wouldn't be looking to sell it until it closed beneath that level there. This is the junior miners ETF, and maybe this is a better way to go than many of those other individual stock plays, because you're going to get a bit of diversification within that. And this is one, this is the other, not just for the junior miners, but including some of the bigger players there. And we did go plus 1/3 on that last week. And much like the other one we just saw where I did copy and paste, happy to add to that position. And really my style is, finding something I like, and if it continues to do the right thing, continuing to add to that position. And if it doesn't, then I'm happy to get out. This one is probably more in that category of, I think it will go up. I really like this, and I really like the response after that. In fact, this is good too here with the volume and the supply removal, but there's just so much work to do. So I'm not going to put the plus 1/3 on that one, but if you had it 100% a hold, and probably ditto on this one here. I think it's more advanced than some of the other ones where I said, hey, not ready to put the plus 1/3 on, but I'm still not ready to put the plus 1/3 on. It just didn't have the demand side showing last night that I'd like to see with the big white candle, but certainly one I could entertain if it was to put that in tonight or the next night with a nice white candle. I would happily add 1/3 on that as an individual consideration. So just reiterating, don't go plus 1/3 everything here. That's not what this is about. It's just looking at a sector of interest and saying, well, I think there are some opportunities in that sector at this point in time. Okay, I've probably headed off a few questions as well by doing that as well. I'm going to get to a couple of comments here. Chich saying, Carl, do you have any experience working on a professional trading desk for a bank or private hedge fund? Well, I wouldn't call it professional, but a bunch of non-professionals, certainly, trading desk, where we were trading our own money. So prop trading is the way you would say it, in an office. So certainly experience there. I have managed other people's money many times in the past. I don't know if you call that a private hedge fund, but I think that's a warm yes for your question. If not, where did you acquire your expertise on technical analysis? I've just looked at charts day in, day out. This is all I've lived, breathed, ate, and slept for about, I'm not kidding, for 30 years since I was a teenager. As I said, other kids were out there skating or surfing and chasing girls, and I was in the library looking up what happened in the 1987 stock market crash. I can't explain it. It's all I've ever wanted to do. And if that's your passion, you will absorb it like a sponge. And I'm closer to 50 than I am to my teens right now, Cheech, but I've been doing this a lot longer than most people, that's for sure. I might still look young to some, but I can tell you I've this every minute of the markets for 30 years. And I love it. I wouldn't want to do anything else, to be honest. And we digress though. Let us do JHX in the US from K. Wonder what K stands for. But I think you're cheating here, Kay, honestly. Let me go JHX, which is James Hardie. That's just cheeky because this is an Australian company. Its main listing is here. It does have ADRs, American Depository Receipts. That's what that stands for over there. It's a bit cheeky from Kay to ask me about this one because we can do this on Tuesday. But I think it's fine. No complaints. Happy holder. Could I add some more? I don't see why not. It's going in the right direction. Maybe just let it do one more of these candles here. That's all. And then you could add some more. But look, no problems holding on to this in the meantime. That's a bit cheeky. Okay, let's head over to Chris here asking for AMBA. So I have an accident with my mouse there. AMBA. Ambrella. Oh, I like this. This is very interesting. What I'm going to do while you look at that chart, and here's your homework. What do you think Carl's going to say about this chart? Okay, and the reason why I'm making you do that is I haven't loaded up the Refinitiv Icon spreadsheet. So while I'm loading up the Refinitiv Icon spreadsheet, I want you to pick the top 3 things on this chart that Carl's going to like, and the top 2 things he might not like. Okay, that's your homework. Let me get this going. I should have some music in the background, shouldn't I, while we do stuff like this. And let me change this to AMBA.N, so we will have a look at the fundamentals on this one. And if you're not sure what's happening, that's what's happening in the background. It's loading. Okay, so 3 things that Carl likes about this chart. It's just these white candles. That's the first thing I see, even more so than the trends. And as I tell you, those trends are there because when I do my scans, and we go here, new analysis, And you can see it's a market breadth scan. So when I put out those market breadth pictures, that's the formula that creates it. And I go open, and you can't see these windows, unfortunately, just the way OBS works. But let me go long scan. So you can see that says long scan now. I can't show you the formula again because it's just not loaded up on OBS, which is the broadcasting platform. And I wouldn't show it to you anyway because it's my proprietary information. But what I will do is I might just get a scan going. And what I'm going to do here is I want to set it up. What I like to do is go back to here for a sec. And so what I like to do is find here, Mark likes the candles. Yes, the candles are amazing. That's the first thing that strikes me. And we'll get to the point on this very soon. But see this here. Okay, see this here. And maybe you can do this if you've got TradeView or you've got Amy Broker. They're not that hard to program, and there's so much information out there on the internet that can give you the basics of how to do the basics, okay? And stuff I'm doing is pretty basic. But see that big black candle there on the NASDAQ? Think about this for a second. What if we searched for stocks that are showing nice uptrends, yep, or at least the short-term trend is a knockout, but the long-term trend is at least orange, not pink, right? So turnaround plays. But also on this candle here, where the market got belted, didn't get belted, okay? And that's the way I like to, when I'm doing my scans, often I'll tweak them to accommodate stuff like that. So what I'm doing is I'm looking for relative strength. Yes, we know there's a lot of stuff going up. You've seen my market breadth charts. If you don't know what the market breadth chart looks like, let me show you, because I've mentioned it a couple of times. And I tweeted it. Okay, don't worry, that it will appear. Don't worry, it's coming. I just have to do that because that's what OBS is linked to. And while we're here, let me show you that CCJ, Cameco, is on our trading platform. You can trade CFDs on that. URNM is also there. Nexgen, which was NXE. Delete first. NXE is also there on Nexgen. Or maybe Nexgen isn't there. Okay. I thought it was. But a bunch of the other ones are there. EU. Can't remember the last one. Oh, 4Us. Energy Fuels is there as well. Look, I'm sure quite a few of them are there. But what I wanted to do was go here, here, and just show you the market breadth. This one here. This is what I'm talking about. So when I talk about market breadth, this is the NASDAQ market breadth. I haven't done today's one, but we can see how it is significantly improving, getting closer and closer to that bull market zone where we want it to be. But what I'm talking about is finding stuff that is beating the market. We know the market's getting better. You can see that on screen, stuff that's beating the market. So let me go in here, that and that. And you can't see I'm changing the formula here. So let's go that and that. And that should work. Let me click save. And we're going to go back to here. And I know this is not our typical session today, but bear with me. I'll make it worth your while. I'm going to set obviously to yesterday's date because here in Australia we're already on the 9th, and then I just hit explore. And actually, let me make sure I've got the right universe. You can't see this, but I'm going to go watch list USA master. So I'm scanning. I'll tell you right now, it's scanning 11,479 stocks. Okay, you can't see that, but I promise you it's scanning 11,479 stocks. And what it's doing is it's looking for that stuff I talked to you about. So we want short-term uptrend. So the 21 and 34 EMAs are pointing up and they are expanding. They're getting further apart. So this is stuff you can, if then else sort of stuff you could program. Not hard to do. The long-term trend zone is not heading down anymore at the very least. Okay, so because I don't mind if it's flattening out, we might get a turnaround play. And then I've done some stuff with white candles, and you can work out what a white candle is because white candles close is simply above its open. And that's pretty basic logic there. So we want a white candle on that big black NASDAQ day. Okay, so NASDAQ had a big black candle, but the stocks we're looking for here had a white candle on that day. And you can see it's about 60% finished. We'll let that do that in its own time. Oh, and that's the wrong place there. Let me head back over to here, or here at least. And we were talking about AMBA, which is in here. AMBA. Okay, so white candles, first and foremost. So many of them. It just screams of accumulation in the market. Something bad happened here, though. How did the market respond to that? Clearly, we had a major supply side event. You can see the huge gap here, probably earnings. Totally, I think, genuinely a surprise to the market, unexpected, because of look what it was doing before. But then look at the response. Look at the demand side, right? Demand side said, is that cheap? Yes, it is cheap. And just amazing through here. So what this does, it does ruin the price action a bit, unless that was a dividend, and then you shift everything back up. But I don't think that's the case. But still, I can't get past just those wonderful white candles. This volume here. So massive spike on that day. Okay, so clearly, don't forget volume is selling and buying. So yes, there were some sellers. Maybe the news wasn't as great on the first pass, but then the buying came in. I know that. A bunch of people got caught out here selling at the lows. We're getting above the long-term trend zone. Short-term trend is up. The only tricky thing for this trade is where you put your stop loss, right? So do you put your stop loss all the way down here? Because really that's your last point of demand. This is your point of supply, obviously. And it's a long way away. So if you look at your stop distance to just get underneath one point of demand, it's a long way. And then you've got your supply zone here. And it's a proper supply zone. By proper, that's the technical term for, I don't think you want to mess with it, right? Don't want to mess with this. Because there's $100 as well, right? We've got a huge round number here, as round as you can get. Can you make one-to-one into there? Look, I think you probably still can, but you might have to make concessions on your stop loss. Could you get a tighter stop loss? Of course you can get a tighter stop loss. You can put your stop anywhere you want. There's no rules, but are you then taking a greater risk of getting stopped out? Look, I think the demand is so good through here, you could do this. And then look how I've changed the reward to risk on this trade. So we're not even talking about setup now. The setup's something else. This is what I call Tradecraft. Okay, the setup is, should I buy or should I sell? The Tradecraft is, where do I buy and where do I sell? Okay, both in terms of where do I sell at a profit and where do I sell if it doesn't go the way I think. Long story short, I think you can go plus 1/3 on this. I've got no qualms about it. Let's get just quickly to the list, back to the list, and you can see here we do have quite a few stocks. I'll tell you how many have come up on that list. Now, I was doing this list not that long ago, and I was getting maybe 150 to 200. I've just checked on the spreadsheet here. There's 643 stocks on that list. Okay, so where that becomes problematic is if you are unable to get through a list very quickly. And this is where I get to the point of where I started with AMBA. I said to you, the first thing that struck me on this, like just smack in the face, was the candles. And I said, it's not necessarily, well, what I was about to say is not necessarily where I usually look first, because I usually look first at the trends. That's why the trends are colored. Okay, that's why they're filled and colored. That might be the only hard part of the programming, but it's not impossible. Because this is where the color of those trends, and you can see AMBA is on the list, came up in the scan list. Okay, and you see I've got other lists here. I'm just going to empty those because they've got Aussie stocks in them. I'm going to empty that because what happens here with this setup is I can right click, and you can't see the right click menu, but trust me, I go right click and I go add to list, and I simply will click the down arrow, and then it adds it to the list beneath it. And you can see how, as I shortlist from this list, the best ones drop into that list, and then I'll have a new list here, and the next the next pass will drop into that list and that list until I have just the ones that I'm interested in trading. So here's the benefit of using the trend ribbons, and it's this visual cue to allow me, maybe you as well, to get through a list really quickly. So I'm not looking at the intricacies of the price action, because if you have 650 odd stocks to get through, and with your brain and your eye, you're trying to do this, you will never get through that list. That is a silly and pointless exercise, right? You can't be looking at that level of detail. And in many ways, you can't even be looking at candles so much. Certainly not candles back here. Really, the best you can do is look at the last few candles. So I'm looking at the color of these trend ribbons and the last few candles as I go through this. Now, that's way too far away. Look, amazing pop-up, probably a takeover. It's too far away from my light green zone. And now that thought process happens in a fraction of a second in my brain, and then I will go to the next one. And I think you can see very quickly why I'm going to jump past this. I'm up to the second stock in my list. I've got 644 to go. Now, this doesn't look half bad. And if you ask me to do this analysis on American Airlines, you've all heard of American Airlines. It's a big company. I would spend probably 5 minutes, and you'd see the timestamp, and you'd look at YouTube and you'd go look at it or not. I'd do the analysis for you. But in actual fact, I wouldn't spend more than the tiniest fraction of a second on this before I did that, because I know with 644 stocks to go, I'm going to find better stuff. Now, this also looks very good. If you ask me about it, I'd spend quite a bit of time talking about it, educating you as to how the candles work, the price action works. And I think it looks very, very warm. But I'm concerned that I probably won't be able to make my reward to risk work, sort of pushing back into that trend zone with these sorts of Tradecraft dynamics. Okay, so that wouldn't get more than a fraction of a second, even though the green is pretty good, but I don't have a light green there. So again, there's a few levels going on here, right? There's the color. Okay, bang, that's on my shortlist. So right click, watch list, add, down arrow, boom. If you don't believe me, it's now in that. Okay, am I going to go and do all my Tradecraft stuff on this right now? There's no point me doing Tradecraft on this because I've got 641 stocks to go. Okay, this needs to go in the shortlist, sure, but then move on. Why is it shortlisted? Double green, beautiful white candles, price action. I'm not too stressed about this right now. I'll worry about that later when I get to Tradecraft. Okay, and then I go next. Oh, this one is very good. I'm going to go a long way away from the green zone. I think it still needs to come back and test and hold that long-term trend zone. Assure me that it is now dynamic support, not supply. But I don't need to spend any more than that. I mean, my brain, bang, shortlist, right click, shortlisted. If you don't believe me, it's dropped into there. And you can see how that will build up. Now, I'm going to go, I've told you what I'm looking for, and I'm going to go through these at the pace I would actually go through these on a daily basis. And it almost sucks when there's a really good bull market because it takes a long time because I end up shortlisting a lot of stuff. Okay. So if you can see me clicking, but you can't see me right clicking. I'll just call out shortlist. Look, it looks very good. If it was the only thing I saw today, I might even buy it, but I'm going to see plenty of other stuff. American International Group, one of the GFC big players there. I'm going to go pass. I'm going to go pass. I'm going to go shortlist. Okay. It's very close. I reckon I'll find better stuff than this. Pass because of the shadow, just because of that shadow. See that shadow off on the last candle? I'll find better stuff. Oh, that's very good. I like it. I'm gonna pass though, because I reckon I've already got better stuff than this. So I'm gonna just go pass. Shortlist. Okay. There we go. I think it's good, but just not today. And if I'm committed to doing my research, and because I'm an end of day trader, I look at daily charts, I'll be back here tomorrow. Now, if this thing throws up that big white candle tomorrow, I'll deal with it tomorrow. Do I need to deal with it today? I've got plenty of other stuff I need to deal with. This is great. Would I bother shortlisting it today? No, I don't think I need to. Why? Because I've got another 638 stocks to get through. Looks very good. I'm just going to refrain from shortlisting it, but only just. What's this? Ambrella. There you go. We've talked about this one. I could happily add a third on that. Is this the best one we've seen today? Look, I think it's really good. I think it does deserve to be shortlisted. But already, is it going to be the one today? I think that's amazing. It's almost a compulsory buy just because of all those white candles. And then I look back and I see this, and this is I get through all this. I might get through this 650 stocks. I might get through it in about 5 minutes. Honestly, it might take you 50 minutes on your first go. On your second go, it might take you 45 minutes or 35 minutes as your brain is trained to say, look, I think that's amazing. And I probably should buy it. And I'll probably regret not buying it. But that point of supply, my Tradecraft, I know I'm bringing multiple levels into this. For you, just focus on the candle, on the greens and the next one. I think we should shortlist this. American Woodmark. Don't know what they do. Honestly, couldn't care less. AutoNation. I want to buy that. That looks great. Shortlist. I think this looks amazing. Oh, there's just 2 big points of supply, but it's so good. I've skipped past it. That I should buy straight away. ANF. And don't get too excited and run out and put orders on all of these, ladies and gentlemen. We're up to AN. Okay, we need to get to Z. I've shortlisted. How many have I shortlisted already? Herein lies the problem in the United States. And if you've managed to get to this part of the video, people watching me ex-post, and you're an Australian investor only, hopefully your eyes just got opened a little bit as to what you're missing out on, because the Aussie market right now is rubbish, and I'm only in the A's. Oh my gosh. Oh, look, and again, this is Tradecraft. I'm not going to shortlist that one. Oh, amazing. Shortlist. And this might have a detrimental impact on the rest of our webinar when we get to it, which is looking at your suggestions, because they might not be as good as some of these ones. Too far from the green zone. Oh, look, I don't know. Pass. I'm gonna stop talking and I'm just gonna get through them. Shortlist. Oh, amazing. I'm sure we've talked about this one in the past. It's just too far from the green zone, but it's amazing. Oh, so good. Pass off on better stuff. Oh, Boeing. We talked about this recently. That looks like it's going to break out. I'm going to shortlist it. I don't think it'll be the best today. Oh, jeez. You should just close your eyes and buy that one. Super specky. Put a few shares on it. You don't have to bet the whole house on these things. This is not how a fund manager trades. They spread their risk. Pass. Oh, amazing. Shortlist. And I won't do the right click. Shortlist. Oh, shortlist. Too hard. No, well, that's ridiculous. Oh, this looks good, but I can't buy it. There's too many other better things. I'm going to go past too many better things. Pass. Oh, pass. Just shortlist. Should buy that one. Pass. Just shadows. Looking at the last couple of shadows. Pass. Oh, it's amazing. Berkshire Hathaway, ladies and gentlemen. Okay. What I've done up to this point is absolute blasphemy, of course, because have I looked at any fundamentals? Have I looked at the moats of any of the companies that we've talked about and with the amazing charts I have? Have I checked whether they've got good management or good growth prospects? No, I haven't, because I don't care about any of those things. I know that the market has done that research, and that's why there's excess demand. But here we go. Here is the godfather, obviously Berkshire Hathaway, Warren Buffett's company, of fundamental analysis. And yet here I am, little lowly Carl over here in Perth, and it's come up on my scan. I think you should buy Berkshire Hathaway. You can buy one share for about $335. Pass. Oh, amazing. Shortlist. Pass. Oh, pass. Oh, no, too flat, but looks good. Pass. Oh, pass. Pains me to pass some of these, because if they were if I had a list of 16 stocks, some of these would be the top of the list, but I've got a list of 650. I have to keep going. I'm only up to the C's. Oh, pass. Too flat. Not enough volatility. Pass. As much as it pains me, pass. Oh, just a pass on that shadow, because if I'm looking for top-notch candles, because tomorrow to run the scan, there'll be another 650 stocks to get through, ladies and gentlemen. I can't spend too much time on this. Looks amazing. Lower shadow. Oh, pains me. No, I'll shortlist it, but I don't think it'll be the best one today. I think I've done enough of this, but it gives you an idea of where you could go with what I'm teaching you. Okay. I apologize if that was a huge digression and there was no value in it at all to you. I hope there was. What I'm going to do now is just shut up and just do your request, because that's what this is about. Let us head here, and I've done all of AMBA. For Chris, I'm going to do LLY, which I would shortlist. I think it looks amazing. I could buy it on the basis of that candle and the amazing trends that are there. But Chris, now that you've asked me about this, maybe you scroll down a few of those other ones we saw. Is this going to be the best one we have seen today? And that's the homework I'll give you. But if you're asking me, hey, Carl, this is the only stock in my universe right now, and I want to know what you think about it, yeah, I can definitely do that. And guess what, ladies and gentlemen, tomorrow, this is what could happen. All of the fear and doubt, all of the naysayers, all of the bears out there that are just constantly peppering you with their negativity that what we're seeing in the markets is valid. And I don't want to jinx you here, Chris, but that could happen tomorrow. And this is what I keep telling you, okay? As a trend follower, the first rule of trend following, right? And I'm only going to give you two. And I'm a trend follower. This is my methodology. There are prognosticators and then there are trend followers. Prognosticators predict what's going to happen next. Trend followers simply react. I don't know. You don't know what's going to happen next. Okay. Second rule of trend following. Look, let me change this to I. I don't know what's going to happen next. I am okay with that. ... And that's it. If you can get that, trading becomes easy. It's easier to follow your rules. If something isn't making you money, you'll get out because you don't know what's going to happen next. If something's making you money, hang in there because you don't know what's going to happen next. If it doesn't go the right way, get out because you don't know what's going to happen. And it's this bit of circular logic there. Plus 1/3, Eli Lilly. NFLX. It's just a way of thinking. It's the way I think. It's call it a religion, whatever you like. I think it's great. I'm a happy holder. Am I going to buy it today? I don't think I'm going to put my plus 1/3 on this one today, Chris, because I don't like that candle there. It annoys me and it frustrates me. And it's in line, isn't it, with that big NASDAQ candle. We've looked at this in the past, and I do remember we have said in the past it wasn't ready yet. I don't cover it every week, but hopefully you agree with me that once we got to here, and certainly here, it was ready. Absolutely was ready. They're both plus 1/3 candles. Happy holder, not a buyer, just based on the basis I'm a bit concerned about the second from last candle. Okay, IoT. Let's go to Brett. Amazing. Happy holder if you're lucky enough to get it. Where could you have bought it after that big gap? 24, you're still holding at 27. You know, your worst case scenario, you could just try your stop to break even and just see what happens. That's your worst case scenario. Would I buy it today? No, I don't think the candles are setting up enough for a buy just yet, but they're not far away, and it's 100% hold on that one. MELI, are we minusing a third? I think we are. And yeah, well, it hasn't closed beneath that. So ditto on the last time I spoke about this one with you, Matthew, and we are looking at that low there, which is 1196.16. So let's call it below, say, 1194, but it closed beneath that. Not just a tickle. I know it tickled it last night. It doesn't look good, by the way, but we're looking for a close beneath that. Let me just do something. Because I do have a couple of requests here today from Jason. I want to do Jason's request. He's a big supporter on Twitter. And Jason, LIN, Linde PLC. I think it looks pretty good, but I don't think it looks great. I think the last two candles, I mean, that was a big wipeout in many places on the US market. So that held pretty well. I think that's okay. But you can see here, we do have some issues potentially with the price action and a potential lower point of supply coming in. So here's your first POS in there. There's a POS in there, and let's do this in here, and obviously beneath there, then you are minus 1/3. But until then, you know, happy holder on that. Close less than is a minus 1/3. Oh, look, I don't know if happy holder is the right word, because happy implies that, you know, like it's good, you know, it's going up, and that's why you're happy. We've seen so many other things there to put holding onto this into perspective. I won't run it through the fundamental analysis tool because I don't think it deserves it. This one's not terrible by any stretch of the imagination, and the second from last candle there is actually pretty good. But then we wiped out a little bit. Look, I think this has turned the corner. I think it's on the right track. It's not one I personally would buy, but if you had it, I can see a path to holding it. And you've got a really simple sort of binary outcome here. If it closes beneath there, you'd get out. And as long as it doesn't close beneath there, you can happily hold on if whatever this does is something, you truly believe in. Okay, that's where you're probably going to see a bit of supply coming in on ESSA Pharma. Okay, thank you, Jason, for your support. I've done all the streamers who are watching. They don't have a lot going on there. From Nick. Nick saying, if there's a US stock you want to trade that you can't find on our platform, feel free to email him. He's provided his email address in the chat window, and we can probably add it. What do you think on SDGR, says Matthew. Let's have a look at Matthew's SDGR. Oh, I think it looks very good. Let me just get my default zoom going, because if I got my default zoom, I can see any pesky little things out the right-hand corner of my eye. And I think it's pretty fluid on the downside, so I think you're probably okay on the upside. And I don't want to go too far back because the market has a memory, but the memory often doesn't last that long because people get out, they eventually they give up. But I don't think that's a problem there at $50. Obviously, the big round number is the next key point. Look, I love last night's candle. I think it's really good. This and this here is a little bit of an issue, and I think that warrants the slightest bit of caution if you were to get in, and maybe therefore just waiting until we can at least close. I'd say at least close in these shadows. I mean, these shadows represent. Let me get rid of some of this stuff again. So if you look at what these shadows, think about what these shadows represent. They represent supply. It is exactly in those shadows where the supply on those days really started to do its work. And I think if we can close at least in the shadows, preferably above those shadows, don't get me wrong, but as an aggressive entry, at least in those shadows, then I think we are starting to say that the supply that was there is being overcome. And that's all this is about. Are we overcoming that supply? Why was there supply there? Well, $40 is a valid round number for me, 40, then 50. And I think we just saw some profit taking because not that long ago, it was 26, 27. So the human brain, unfortunately, has a number of foibles. And one of those is when stuff goes up a lot, I therefore must sell. And we saw that supply come in, and then it's all about how the demand side responds. I think they responded really well, light green zone, decent candles. And yeah, long story short on this one, let's see it close close to 40, if not above 40. And then I think you can plus 1/3. But look, for me personally, I think there's enough other good stuff out there to look elsewhere and maybe just keep an eye on this one instead. Okay, back to Perry here, HQI. How are we going for time? I'm going to have to pick up the pace. Good news is because Osby's moved my spot today, I don't have to have a hard stop at 1 p.m. your time, so I can make sure we get everybody's questions answered. I think it looks amazing, Perry. I'm a happy buyer of this one. And a few people will say, look, I can't buy that car, it's gone up too much. And again, you do your way, I'll do my way. Hopefully you can see though, with my methodology, this is it. I mean, that's the candle that you should have bought at. And you can see here, it actually really reinforces what I said before about having that shadow close at least, having the close in at least that shadow. And a lot of people will wait for a breakout. I just think that's a bit superfluous sometimes. I know that's basic technical analysis 101, isn't it? But I think that's just a very basic, very simple way of looking at markets. And it's kind of ignoring what that candle is telling you about demand. So to wait for the break, I think is wasteful in many ways. But yeah, look, Perry, I think that looks amazing. Let us, look, of your requests, this is the first one, I believe, that we need to go here on. Let me put that away so I can make sure we can see it. So let's go here and let's check out HQI on the fundamental analysis tool. Look, as much as I trash fundamental analysis, I know other people love it, and it as much as technical analysis sits well with me, the fundamentals is what drives them. So I don't want to ignore it in these sessions. Now, the problem is we've got ERII, which is end of financial year. We need to match those up. We've got only 3 brokers covering this one, 6% upside. Not a lot of data here, so I don't think we're going to get a really reliable valuation. But they're pretty positive on it. 1 buy, 2 strong buys. EPS line, not a lot of it, but what we can see here, 67.89, 105. Look, it all looks pretty good there. In terms of the compound annual growth rate, out for the look forward period, 12%, which is considerably better, close to 40, 50% better than what the market's going to give you. And really we're looking at a dynamic PE of only 20, which I think is really reasonable for that. So I don't see I think that's a good PE. And then I just check it against the historicals, which we don't have much of, but it's very, very low against the historicals. Look, my spreadsheet's saying this is at least fair value and probably even better. I don't think this is untoward at all. And I'd probably say even a little bit more probably allowable on that. So there's no red flags on HQI. I think happy to buy that chart. Let us go to ERII from Perry. ERII. Oh, he keeps giving them to me. So let's go plus 1/3 on that straight up. You know, if I got down to the E's, no doubt I would have shortlisted this one. It looks amazing. I'm expecting the weekly charts just going to look even better. And if you can detach yourself from this fear, ladies and gentlemen, of all the FUD out there, but more importantly, the fear of buying this now and having it go down, you have to detach yourself. It can, it will, you know. But understand, this is why we only add a third. Even on the best looking chart, I still only add a third. I add a few shares, and if it keeps going up, I add a few more, okay? Because I like to buy stuff that's gone up a lot. And sometimes they're prone to reversions to the mean. Doesn't mean that the trend's ending. I think you should only really be scared of buying anything if you don't have a plan on how to get out, and I've given you a plan on how to get out. So why should you therefore be scared of anything in the markets? Just trade what you see, not what you think. ERII. Let's have a look here. Energy recovery. Again, limited coverage, 4 brokers, a bit of upside there in the price target, 27.75. Nearly 3%. 1 strong buy, 3 buys, no holds, no sells. That's good. We've got some more historical data here, which is great. EPS line, quite wobbly actually, but apparently getting way better. And this could be just a bit of broker enthusiasm and optimism. 98% growth rate is going to be extreme for my spreadsheet, so you're going to get crazy numbers in here. The historical PEs have been much higher than 50. You know, I top out closer to 40, but I do think even with a 40, it's still going to give you some crazy numbers in here, and I won't go any further into it. But I'm looking for red flags, and I can't see any with that one. Let's go to the next one of Perry's, which is ACLS. It's just amazing, and hopefully, again, you can see using my methodology, there were about 20 or 30 different places you could have bought this one earlier. But again, if you're going to play that game of I could have bought it earlier and I won't. You know, the leopard spots here are pretty good. So plus 1/3. Look, this is starting to get a bit of a ways away from my light green zone. That's the only thing. If I can find something that is doing this instead, right? That might get preference over this one. Okay, so we don't have to just buy everything that's going up. You know, our job is to look through the alternatives. FSS, and I think maybe we're also seeing how I think looks fine. Look, no issues. You can see the sketchiness of the candles. So I'm not sure if that's the one you actually wanted, but that is, I know that's FSST. So let's go here. That's just Amy Broker playing tricks on me. And go to that one. Yep, amazing. Plus 1/3, no complaints. We have looked at this in the past. I'm not sure what I said on it, so I can see the previous scratchings. Probably no. Actually, this is something else. I know what that is. But yeah, happy plus 1/3 there. Let us quickly do this one here. I remember to change the screens. FSS. And 5 brokers, 1%, they say fairly valued, a bit more of a spread here, but generally skewed towards the buy side. EPS line is bottom left, top right. I think that's impressive. Really good growth here. Let us change this to dynamic F. And we are saying 24, which is fine for 16. 24 PE for 16% growth, not an issue at all. And look, I think it's really low compared to the 5-year range, and therefore no issues. I would say this is very cheap here. The broker's probably got some upgrades coming on that one. And then I might as well go here because I know Perry's only going to give me stocks that we would look at anyway, right? So normally I only look at them if there's a if the chart suggests we do that, and we actually don't have any data here, unfortunately, for that one, Perry, but let's have a look at the chart for you. And let's say here, WINA, which is magic as well. I don't think the candle's as good as some of the other ones we've seen, but yeah, no problems holding. And it's actually one we have talked about, plus 1/3. And look, again, I know I've said this a lot today, but wherever I drew that, look at that. Does it look any different from so many other charts that we've seen? Some wobbles in there. Look, that's the key candle there. Otherwise, it's gone pretty well. Okay, let's go to Nikola. Okay, I'll own some Tesla shares. Great, let's do Tesla. It's one we haven't put a plus 1/3 on up to this point. I think for very good reason. I don't think it's warranted it. I don't think up the light. We looked at it probably around here. At that time, it hadn't got above the long-term trend zone. It hadn't showed that long-term trend zone was acting as dynamic support. And really, it's only until these two candles here that it showed any sign of doing that. But it didn't have the customary pullback that I would have preferred. So I want to see this and this, and it didn't have it. So it's one of those few, you'd say, that I would have missed. And I quite happily concede that no, I didn't tell you to buy Tesla at lower levels. Could you buy it now though? Let's get rid of some of this stuff. Obviously, this was the big point of supply, so we're above that now. That's important, and I think we're holding well above it. The next big area of supply up here, Nikola, is clearly going to be around 310. I think it's pretty fluid on the way down, so it should tend to be pretty fluid on the way up. This could be a bit of a level as well. But I can't see any reason why you wouldn't hold it. As for buying it, I just think it's a little bit of a ways away from the green zone, but otherwise, no complaints. Look, is this the best thing we've seen today? And that's the only thing that would hold me back from calling it a buy and putting plus 1/3 on the screen. But if it was the only thing we had, if we had a universe of one stock, then obviously this would be the stock you would buy. Okay. For Nicola, who's asking, because she owns it, should I take profits? Nicola, not on that candle. I can't see any reason at all based upon this short-term trend. Let me get back to my arrows. This short-term trend, this is improving. And look at this, just white candles. Amazing, wonderful, fantastic. And whilst those candles continue to stay white, why would you take profits? It's telling you that there's more demand in the system than supply. And who cares why people think that way? They just do. Watch for here though. Watch for the black candles popping in around 260 to 270, probably a bit before 270. And if you do see the black candles, maybe you want to take some off the table. Okay. The next part of the question is, can she go in another third? I think I've covered that. I think there's better stuff out there, but again, universe of one, sure, you'd be buying Tesla. DKNG, DraftKings, something to do with, what do they call it over there? The sports, fantasy sports, if I'm not mistaken. I think it looks very good. This little pullback here is just a NASDAQ pullback, but it came back well last night. It's holding that. I think this is a nice little demand zone. I think you've got a really simple sort of trade here. Basically, sort of stops under there, entries around current price, and then your sort of turnaround play sort of stuff. And there really is nothing holding this back. As I said, really fluid on the way down, tends to be quite fluid on the way up. So, look, I don't know if I would buy it just on the basis of that second from last black candle. I might force it to give me another white candle first, but really I've got no objections to adding a third on this one. Again, if it's a single stock universe, plus 1/3 on that, if that's the one you're interested in for Phil. Now I'm curious here. Let's head over to it's something we're considering buying, DKNG, and then I'll do Tesla as well. Why not? We are coming up to an hour, but I will try. Please stop typing in any new ones. I will try and get to all the ones that we have on file. Okay, let me kill that so it's out of my way. DraftKings, look, widely covered, 28 brokers, 11% upside on the price target. Look, generally buys, but a little bit polarizing. We haven't had any profits yet. So my spreadsheet will not be able to value it. There you go. No compound annual growth rate, which is what no CAGR stands for, because you can't have a compound annual growth rate when you've got a negative number. And I can't even fudge it by going into forward years and discounting it even more harshly by doing so because of the future, because I've only got one number there. And a compound annual growth rate needs 2 points to give you a number in there. So I can't value that one for you, but I certainly can value Tesla. TSLA. There we go. Have to get it in caps, of course. And we're going to have plenty of coverage here, no doubt. Come on, Icon, you can do it. There we go. 35 brokers covering. Well covered. Look at that. I love it. This is my favorite thing in markets, ladies and gentlemen, where a stock is going up and yet everybody thinks it should be going down. I just love it. People complaining people, I love it when bears, I love it when people who aren't long complain about the market. It just gives me this warm, fuzzy, I'm feeling it. It's like a warm blanket wrapped around me. Their pain and frustration at not being long, knowing that I just follow the trend. It's going up, hey? So who cares about that? And who cares about that? Let me try and give you a valuation based upon the facts. EPS line is a monster. Actually, the pullback here, though, that is real. But then the broker's suggesting that, these are all predictions. Make of them what you will, 27%. Now, if it does achieve that growth, then I don't think 44.9 on the PE is crazy, but it is high for me. It's not high based upon what markets have paid for in the past, but I just don't think they'll pay that in the future. Look, I don't know. I top out here, and I won't even muck around with the risk level, but let's say I don't think it's undervalued at all, and I think I just don't agree with that. So happy to follow the Tesla chart there. Okay, and again, look, you're getting my view on the world, ladies and gentlemen. Either it appeals to you and it's something you want to adopt or implement somewhat into your strategy, or you just hate it and you just have an allergic reaction to it. And there are many people out there that have an allergic reaction to my way of thinking about the world. Happy holder here. No reason not to own it. You can see we've had some scratchings in the past, sort of skewed towards the buy side. And yeah, there's no, look, it's not shooting the lights out in the last few candles, but I think that trend is so strong. Where would that change? Look, below 100, you probably take a profit off the table there, Daniel. For Hirequest MVIS, which is a monster. I called this 10 out of 10 right there. Hopefully, Hirequest, you got onto it. What about, there's some question marks, I don't know. Happy holder, no reason to sell it. Would I buy it? Well, geez, it's a long way from my light green zone. I want to try and find something a bit closer, showing all the attributes of where I labeled it 10 out of 10 for a turnaround play, because I totally agree. I reiterate, at that arrow, where that arrow is pointing, and just if you're unsure where the arrow is pointing, it's really pointing to that candle there. That is a 10 out of 10 turnaround play. Happy holder, no doubt about it. MSFT, Microsoft. Okay, we should talk about these, because I think this is an important supply event last night. We've only been buying up to this point, and you can see just how many buys we've had. And as much as it pains me to do this, and this is the luxury you have of if you've added incrementally over a long period of time and you've ridden something up, you have the ability. I think we can do this, but that's it. And I just think it's a partial exit based upon just heeding the warning that this candle is giving us. And it's not just that candle. You're always going to get supply. Supply is ubiquitous. It's always out there. We got some. It took out quite a bit of demand. It took out quite a bit of buy the dip. You can see that in the volume. And there was such a muted response to it last night, even though many tech stocks actually pushed up. So I think on the balance of those two candles together, minus 1/3, but you've still got a significant holding here based upon this and this, so no complaints on that one. So taking a little bit off the table on Microsoft. Let's go to AMZN for Jill. I'm going to go ditto, but it's a partial exit. And if you only got in 1/3 to start off with, do you realize that it doesn't mean you get out you don't get out the whole 1/3? You chop that up into an even smaller part and get out 1/3 of the third you got into. Seems counterintuitive, but the trend is still there. So why are you getting out of your whole position? You still want to hold some, even though you got a little bit. And you might end up with just a few shares of a few bits and pieces. But if you're trading, and I keep telling you, if you're trading our CFDs, and CFDs aren't for everybody, do your own homework on this. Be a grown-up here. And don't say, oh, Carl told me CFDs are for everyone. No. CFDs aren't for everybody. Do your homework, be a grown-up, understand the risks and the rewards. But for me, the rewards are zero commissions, right? Being able to use the power of leverage to make the most of a small amount of money, make it work over more companies. But if I'm disciplined and I use my stop losses, I won't have to necessarily take any more risk. So you can buy 14 shares of Amazon. Well, it's actually probably a bad example, $122 stock, but you can buy 3 shares of Amazon at 110 and sell just one of them now at 122.50 and hold 2 shares of Amazon. Let's say your ordinary trade would have been 10 shares. So 1/3 is 3. But you're getting out of now 1/3 of the third, which is 1. You might have to replay that one a few times to understand what the hell I just said. Google. I'm going to go ditto on a few of these. I better write them on because I don't want to forget that I did tell you to do this. And even if you get a huge rally from here and you're all cursing my name for telling you to sell that one share of Google, no, I'm happy to cop that, but I'm just telling you what I think. And let me make sure I write these on as well. Okay, so it's very easy now. Dittos and SOXX, I'm guessing is probably ditto. Nope, that's fine. But just watch out though, because we've got, obviously that's not good. I don't think that's a minus 1/3 in itself. This is getting me very close to calling a minus 1/3 because I don't like to see that and that. And again, I know I'm a broken record for many of you because I draw the same stuff and say the same stuff on every chart and every week, but that's what we're worried about. We're worried about this candle, but this candle really is not an issue until we start to trade beneath here. Because remember, if we're in the Swiss Alps and we look to this side and we see a mountain, and we look to this side and we see a mountain, well, we must be standing in a valley. Okay, so close beneath here, that's minus 1/3 on the SOXX, and I know that didn't label correctly. And let me do that. We are starting to push on time. As I said, please don't type any new ones in. Uranium we've covered at the start, Jill. Haraju saying, thank you, Carl. Love the educational stuff and technical analysis and your scanning process. Love to learn more. Pleasure, Haraju. I'm glad you said that because I'm not kidding. I'm genuinely concerned about the balance in these these webinars, whether I do too much of one or the other. I did HQI for you, Perry. I've done those. Maybe Perry just put them in. If I'm not sure. Don't worry, Perry. I see everything. Barry asking about HQI. Is it close enough to a short-term uptrend? I just want to just find Barry's answer. I know we covered it. I think it's amazing. HQI looks amazing. Short-term uptrend tick. Yes. I have done everybody's requests today. Just Superman over there on YouTube. NVDA. Definitely want to cover this one. NVDA, not MVDA. We already said to take some profit on this one. Yeah, look, the writing's on the wall here. So let me just move that closer to here. But we can see POS. Right, you can see POS. They're not going up anymore, they're going down. We can see the pod, the valley in between the two Swiss Alps there. And therefore, on a close beneath that, that's the minus. That's a trigger. So it's not, or if, but maybe should be. What should I do? I don't have what should I do. I just have, well, I've got to do this. And that's where you need to be with your thinking. It's like, well, it's not what should I do? It's just I have to do this. That's my methodology. And if it goes up the next day, that's okay. I did what I had to do. So I'd go minus another third on that, depending on how much you got in. Okay, but it still means we're retaining. So if we go copy paste, I still think you're keeping some skin on the game on this, at most 1/3 retaining on this one now. So just updating where we are on that one. You bought 3 shares, you got 1 share left. And we are, AMD, sorry, from Adonis. Sorry, Adonis, AMD. Ditto on the last one. I don't think we've done a second 1/3 here. I don't think we've really even done the first 1/3 because we haven't closed beneath the valley, the pod. But Adonis, rest assured that if we do close beneath that level, I would be of the thinking that we would be minus 1/3 close, less than minus 1/3. Okay. And we have officially finished. Let me head over to here and to here. And to remind you, of course, that on Tuesdays, we do the ASX shares, if that's your thing. On Thursdays, we do all the macro stuff. All the recordings are on YouTube. They're going back to day dot, and you can go back, and some of them are educational. You might want to listen to previous ones as well, because I might say something that really strikes a chord with you. But we do have everything on file, everything I've ever said. Head to thinkmarkets.com/au/webinars to register. If you're not with ThinkMarkets, you should be, because we are the good guys in the Australian broking scene. But hey, if you're not listening from Australia, we've probably got an office near you, because we are a proper global company, offices all over the world, and we're regulated all over the world as well. So you have to actually cross all the T's and dot the I's, because everywhere's got different levels of regulation. But you can trade shares with us, Aussie shares, obviously here if you're in Australia, but the local shares wherever you are. But we do have the CFDs as well. We can trade commission free and really, for me, trade like a hedge fund manager. We are an award-winning broker. We've recently been nominated here in Australia for having the best platform. It is the best platform. It is easy to use, and you can do desktop or phone-based trading as well. You will have a dedicated account manager with 24/7 customer support. Head to thinkmarkets.com/au for details. If you're watching me on any of the streaming services, please subscribe to stay notified of any future updates and hit the thumbs up button. Very important you do that because it helps me on the Google, on the YouTube algorithms to get higher and higher up, and that'd be good if more and more people could see these webinars. Apart from that, it's been a pleasure chatting with you today. Hopefully you enjoyed it. All the best for your trading and investing. Till we catch up again. Bye-bye for now. Before you run away, just a reminder that everything we've discussed today is general in nature, has not taken into account personal financial circumstances or particular needs. So before acting upon any of this general advice, please consider it carefully or seek the help of a financial professional. You can get everything you need to know about ThinkMarkets and our products and services by heading to our website and downloading our PDFs.